Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is July 3rd. Today's episode is going to cover news of some special episodes out of Rocket Fuel that you might have missed. We're also going to be talking about a huge report coming out of EthStaker that a whole bunch of Rocket Pool people contributed to. And we're also going to be talking about a class action lawsuit that has been filed against Lido. So with all that and more, let's get started.
10, 9, ignition sequence start, 6.
So like I said, we're going to start today's episode with news of two special episodes that I've released in the last few days. So for those of you who've been following along with the tokenomics discussion, you'll know that we're coming to a point where the community is kind of trying to tighten up a lot of the loose ends that are left and answer any remaining questions. With that in mind, I did a Q&A session with Val and Samus. In the episode, I gathered a whole lot of questions from different places, including Discord and the Rocket Pool community, from ETH Finance, from Crypto Twitter. I gathered lots and lots of different questions, from different perspectives, the perspectives of our ETH holders, node operators, RPL holders, legal questions, team questions, timing questions, a whole lot of questions that people had about the tokenomics that they just feel like they hadn't been answered or they had missed the information. I posted these questions to Val and Samus, and they spent an hour and a half answering these questions, and it was a really, really great episode where there was a whole lot of information about how the new tokenomics are going to work, and all that was shared. And I think it's really worth your time if you have any questions about the tokenomics, because there's some really good info there. So definitely give that a listen. And then today I released an episode with Evan, who's IB1 Gymnast on Twitter and in the Rocket Pool community Discord, where Evan came on and shared an alternate proposal for tokenomics. I'm not going to say too much about what his proposal is and how it all works, but his idea is basically let Rocket Pool kind of continue growing the way it is, and introduce smaller like LEBs, LEB4s and LEB 1.5s, and also changing the way the RPL collateral works. So like I said, I'm not going to say too much about the episode. I'll let you all watch it yourselves. But this episode was also featuring Samus. So as Evan kind of presented his proposal, his tokenomics proposal, Samus was kind of refuting it, sharing points of overlap, sharing points of difference, and I think it ended up being a really good chat between me with Evan and Samus, and it just kind of, I think, help you kind of see why the tokenomics decisions made by Samus and Val are the way they are, and if there's another way of thinking, what some of the strengths of that are and what some of the weaknesses of that might be, and I think it was a really good chat as well. So definitely give that one a listen as well if you are curious about like other ways of imagining Rocket Pool tokenomics. So moving on to some Rocket Pool / staking news today. So here we have this report from EthStaker. EthStaker, for those of you who don't know, is like a community resource for education and support around Ethereum staking. And Nixo and Buddha, who are two very often frequenting people in the Rocket Pool community, are involved with this. Of course, Superfizz was involved with this before, but EthStaker is a huge resource for Ethereum staking, and they published their report. I think it's an annual report that they do. I remember the last one covering a Rocket Fuel a year ago. So I promoted this on Rocket Fuel a whole bunch of times. I think a whole bunch of Rocket Pool node operators answered the report. So here, quick tweet. They've been kind of like promoting little snippets of it for the last couple of days on Nixo's account and the EthStaker account, but today the report was released. So here we had news, some like little tease in the tweet. But if you have a look at the actual report itself, you'll see that there's some really, really great information here. So Nixo wrote this, but I'm sure like other people in the EthStaker community were involved in getting all of it put together. The abstract was independent operators, often broadly referred to as solo stakers, were surveyed for information that gives better visibility into their profiles, demographics, pain points, and motivations. We know a high degree of confidence in staking and resilience among respondents, despite an emerging feeling of structural disenfranchisement and concern for centralization pressures on the validator set. So it says the intent of the data is to provide a perspective of a very privacy-oriented set of actors in their own words so that their needs can be represented accurately. This survey is intended to be annual and feedback on the question set is welcome. So here there's information about the collection and distribution, how they got the word out about it, where it went, who answered the questions, the analysis. They only checked for complete submissions, and they did some light symbol checking or bot checking, and then some of the questions were single choice answers and some of them multi-choice answers, and that is denoted by a star in the results. Then the sampling bias said, it's a self-selection towards people who are passionate about staking, engaged with home staking most likely, so they might be overrepresented, but there's some good information there. And then they said that using this information, you can see that between 8% and 47% of all node operators on Ethereum are home stakers. And they use a couple of different pieces of information to kind of get that number. So they said at the time of writing, validating nodes using Rocket Pool can be estimated at 1,832, and then there's some more information as well. So they've got a results section with raw data that you can go and have a look at, but then the results are actually really interesting. So let's just get here, when did you start running your validator? 32% of people who answered are 906. 32% said, at Genesis, and then since then it's kind of been flat at different times, with some people coming in Q1 of 21, and then others coming later. My cohort is actually one of the less represented at 8% with its Q1 2022. And then where do you run hardware at home? Most of the people here, 80% said they're home stakers. And do you also hold staking tokens? And 84% of them said either no or not significantly. And then has your method of staking changed? 85% of people said no, it hasn't. What percentage of your ETH do you stake? And here we have 77% saying 66% to 100%. Then are you in a smoothing pool? No for 61%, and 9% don't even know what that is. And then 30% said yes. And then there's information about the operating system you use, what software, help do you get, and that includes Rocket Pool's Smart Node. And then what concerns do you have, right? And then some people, they're concerned about supermajority risk, tax issues for staking, hardware issues, and key management. And then there's other questions here as well about that. People don't keep track of that bandwidth, really. And it's almost 70% of people don't keep track of bandwidth. This is an interesting question here about how much time do you spend working on maintenance and troubleshooting your validator, and the vast majority of people spend between 0 and 4 hours per month. So it's very few people who do that. And then how problematic is the current state of staking centralization? The majority of people think it's 4, 5, or 6 out of a scale of 6. And then supermajority risk, how big a risk is that? And then again, the similar kind of numbers, but the peak is around 5 instead of around 4, like the previous question. And then there's questions of perceived value and representation. So here you have, how have your views on the value of solo staking for Ethereum as a protocol changed since you first began? So more favorable is around 48%, 41% are neutral, and less favorable is 11%. And here, how have your views on the value of solo staking for an individual changed since you first began? And those are pretty much split equally. And then there's very interesting information here about issuance. So it says the current issuance curve is imperfect, and I would support a robustly researched alternative if it preferentially benefited decentralized forms of staking. 60% say they agree with this, 32% are neutral, and only 8% disagree. And as a staker, how well do you feel that your interests are represented in ongoing research and new protocols in development? And this is pretty much like a normal distribution, with majority of people saying 3 and then 2 or 4, and this is a scale of 0 to 6. So it's kind of skewed more towards the higher amount, but very minorly. It's quite an even divide here. And then it says, which of the following best describes how you feel about the existing advocacy for solo stakers? So it says, researchers try but aren't very effective against big interests. Researchers ignore solo stakers. Researchers are hostile to solo stakers. That's a very small opinion with only 2%. Researchers don't know or pay attention, and researchers try to benefit solo stakers. So majority of people think that either they're not effective or they do try to benefit solo stakers, and only a small percentage of people think that either they don't know or are hostile or ignore. So it's around 60-40 split with those. And then with continued participation, this is really interesting because around 55% of people, 65% of people here answered that they want to keep adding new stake as their how do you plan on adding new stake as your financial situation allows? And then here, 30% said yes, no plans to stop. Yes, we'll stop at a specific yield threshold. Yes, we'll stop if other yields in DeFi are much greater. Yes, we'll stop if other specific milestone. So, and then how long do you want to keep validating? No plans to exit as long as yield is above 0, and then having real life goal to exit for, etc. And then where do stakers learn? So here it looks like they get most of their information, the people who answered, get it from technical guides, from EthStaker, from Ethereum.org, from YouTube, and then from Rocket Pool, Software Docs, Discord, Reddit, etc. Maybe one day they'll say Rocket Fuel on there. That would be cool. How do you keep up with necessary updates and news? And again, here it's like Discord, Explorer, notification service, Twitter, Reddit, other, and then don't keep up is a small option. And then part of the other is like GitHub, Daily Gwei, email list, podcasts, Podcaster, YouTube directly with Node, and others as well. So including the Rocket Pool community there as well. And do you keep up to date with Ethereum protocol research when it pertains to staking? If yes, what do you use? And then people say Twitter, Discord, Reddit, ETH research, or no. And then other is like Daily Gwei, podcast, YouTube, Bankless, Farcaster, etc. And Ethereum Magicians as well, which is like the smallest option there. And then said there's some open-ended questions about unaddressed concerns. And these include things like, decentralization and centralization risks, user experience, technical barriers and hardware, issuance curve adjustment, economic and tax implications, MEV, privacy concerns. And then with demographics, 95% of people identify as male, 90% identify as somewhat or strongly technical, 74% not work in crypto, which is interesting. I thought the number would be higher than that by the people who don't work in crypto. And then 88% are staking from North America, Europe, or Australia, which is kind of in line with what we saw with the geographic map last week. And then there's some breakdowns of the details here as well. So it finally ends with a discussion piece that you can go and read yourselves. But I just gave you a big summary of the whole report pretty much. So if you want a closer look, definitely go and play around with the charts and the information in the report. But that was actually really well put together, and it's like a really great data. So thank you, Nixo. Thank you for the team at EthStaker. You guys have done a really wonderful job with this. And then Nixo was kind of out there defending the research and like kind of presenting information about it. I'm not going to get into some of the discussions that were taking place, but you're welcome to do that. You can have a look at Nixo's Twitter, you can have a look at EthStaker, and you can have a look at some of the discussions that came up around that. This one here was with jrag.eth, and it was talking about issuance curve, etc. And then Nixo had some interesting points as well. So definitely go and give that a look if you are interested in getting some more information there. Okay, as you know, today is rewards night. Every 4 weeks on a Wednesday night, Thursday morning, it's Rocket Pool rewards night. So the ratio has been locked in. After Houston, you have 24 hours pretty much now to find out what the ratio lock-in is, so you can up your collateral if you need to. This is the first month in a long time that the ratio is actually up compared to the previous month. So last month the ratio was locked in at 0.00555. This month is 0.00562. Now, based on that pump that we had last week, the 100% pump went up to 0.01. I didn't think we would be this low again, but thanks Gary Gensler for mentioning Rocket Pool in your consensus lawsuit, and I guess just like the alt market has taken a huge hit recently, so the ratio is down compared to where we were 2 weeks ago, but it's up compared to where we were last month. So small mercies and all that. But no, the reality of the matter is that this has been a really strange month in Rocket Pool. I was saying last month that we would have the ratio would bottom out at 0.00555. So far that's holding. I don't know what's going to happen in the coming months. I was hoping that we would have had some news of institution level whale marriage by now. That hasn't happened. Hopefully we will get some of that news in the coming days or weeks. But the fact is that we have technically hit, we're off the low from last month. So let's see what next month brings. So one of the things that was really interesting that happened was, with the ratio getting locked in, people needed to up their collateral. So here we got this, not a whale, but an octopus who staked 8,600 RPL, which is really cool. But one of the big things that happened was this shark actually staked 27,293 RPL. So people are staking RPL, which is really amazing to see. Hopefully it means that, they've got a little bit more confidence in RPL, the token, and they think that it's worth topping up their nodes from here because you can get some good returns potentially over the next few months. Now, these stakes kind of led to discussion in trading where people were talking about, how this person actually bought RPL with the intention of topping it up, which Patches here was it looks like a top up, and Lido said those still exist. And then Patches said still the best yield you can get on RPL now. And yeah, the rewards are looking really, really good right now. Those people in the 10% to 15% range because there's so many people who are under collateralized. But yeah, if you've got from the time of recording, you're allowed 7, 8 or 9 hours to update your node if you want to top up. Okay, next we are moving on to a new pDAO report that Vaka here put out. So it says, hello Rocket Pool, if you need an intro on how the pDAO treasury works, check this post. This period, the pDAO received 6,173 RPL from inflation. Its balance is now 66,259 RPL. The IMC and GMC were paid 10,462 RPL and 4,289 RPL respectively. The final update for the budget allocation to the pDAO was voted on a year ago, has been executed. From now on, the pDAO inflation will be 28.5% of inflation will go to the pDAO, and 1.5%, which is at 90% down from the highs of 15%, will be going to the ODAO. So Vaka, thank you so much for putting this report out, and you can check the transactions and check all the amounts in the links, and there's information there for you all to follow. But Vaka's doing a great job getting these treasury reports out every month, so it's really cool to see that. Okay, next we've got news of a new update, and this is with Geth. So this is version 1.14.6. So here it says Geth 1.14.6 is a maintenance release, but it does ship with the experimental witness building validation code used in Karabali's cross-validation proposal. Note that the engine API is not included in this release. And then there's some little bits of information here. But if you're wondering what this experimental witness building validation code is, here you can actually read Peter Silidy's post about it, this ethx.md, and here he talks about client diversity and how you'll be able to kind of do fast switching of your client in a way that I don't fully understand, but definitely go and give this a read if you're interested in it. What he says is client diversity in Ethereum is exceedingly important due to aggressive slashing penalties in case of consensus error. The more validators are in the wrong, the heavier the penalties are. Even worse, if a majority of validators are in the wrong, the bad chain get finalized, leading to gnarly governance issues and how to recover from the error with perverse incentives from the majority of validators not to. Such an event would have the capacity to have a chilling effect on the entire Ethereum adoption. So then here, he's presenting this information. So definitely go and give that a read if you're interested in that. I'll leave that for you to do so. Next, we have news of Flat Money. And I've been talking about Flat Money a whole lot recently because they're doing a whole bunch of educational stuff around our ETH on Base, which is really cool. And one of the things that they put out yesterday was this idea of Taurus Finance, and they're doing a 4 times ETH bull vault and how it's scaling quite quickly. So they said the Taurus Finance Ethereum bull 4 times vault is scaling fast. There's growing demand for easy to access leverage and exposure to our ETH on Base. Find it in the Taurus Ethereum bull vaults on Base, proudly built on top of Flat Money. And it says here are more details, so you can have a look at more details, and you can go to the Taurus website. But they've got 3 different vaults. One's a 2 times leverage vault, one's a 3 times leverage vault, and one is a 4 times leverage vault. And let's have a look at Taurus and see what they're saying about this. So they're saying behind the scenes, the STETH bull 4 times harnesses the power of RETH leveraged up. But what is RETH? And then they're talking about like with staking and what you can do, and how it's a LST. And here you see it says below the ETH LSTs by market cap, you can see RETH, and it's like the third one here with Lido staked ETH, then Renzo, then Rocket Pool. And it says, while Lido STETH is the top LST by market cap, Lido has historically preferred Geth, which, while reputable, holds the highest risk to slashing if consensus bug is found there. And then it says Rocket Pool RETH was the first to be the trustless, decentralized, open source and permissionless staking provider available. RETH also pushes towards client diversity and thus decreases risk of slashing and increases Ethereum's health. So then they said that this is their vault. So if you want to take leverage on your staked Ethereum bull, which is using RETH, then you can do that with Taurus Finance. Of course, as always, this is not financial advice. This is not investment advice. You can do with your RETH whatever you wish. I have not received any money, tokens, anything like that from Taurus or Flat Money or pretty much anyone else, except that things that I've declared before. So please keep that in mind when you are investing in any DeFi project. I'm just covering the news about it. I'm not telling you what to do. And this is not an endorsement for these products. Okay, trying to get that legalese out of the way. Here, there was an interesting development on the Lido forum, and they said appoint entity to respond to pending class action litigation against Lido DAO. So it seems like on April 3rd, 2024, a class action lawsuit by private plaintiff was filed. This is case number 3:23 CV blah 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 in the California, and naming Lido DAO a general partnership as a defendant. So what's happened is this is a class action lawsuit that people have against Lido, and they're kind of defending themselves, saying that Lido's never characterized itself as a partnership, unincorporated association or other. And basically these people are saying that Lido was selling securities. So it says in the complaint, Lido DAO is alleged to be a general partnership which runs an Ethereum staking business, and LDO tokens or transactions in LDO tokens are alleged to be securities or securities transactions that Lido DAO is alleged to offer or sell to the public in violation of securities laws. So this forum post here is Lido kind of like trying to, well, this person, Cadmill, who's the DAO operations workstream person, trying to convince the Lido DAO and the LDO tokens holders to pay for legal services. So they said there's 2 different kinds of risks. One is like if you act with this, one is if you don't pass the proposal, and one is if you do pass the proposal. Like there's different risks. And then this is the company that they want to hire. It's Dolphin CL LLC, and their company LLC out of Delaware. I guess a legal company. And then there's, I guess, about Brown Rudnick and Stephen Pally. I guess those are some of the legal people involved. And then it says, without admitting any alleged legal classification, Lido DAO as general partnership or otherwise, Lido DAO hereby authorizes Dolphin CL LLC to file a motion to dismiss the aforementioned legal case against Lido DAO as promptly as practicable. And they think they will cost $200,000 or die here, is what they're saying. So this got pushed to the vote instantly because the time is of the necessity. And then you can see the text here as well. And so far it looks like 28 million LDO tokens have voted in favor of hiring Dolphin LLC, and 0% have said that we don't hire them. I don't know what amount is needed for quorum on the Lido vote, but it kind of makes sense that they would push for this to happen. So it's definitely something worth keeping an eye on. But yeah, like, it's tough times for Lido out there. And then here, the Jasper shared the information in the Rocket Pool community, and people kind of, like, Samus was getting worried there for a second, but he says it's not the SEC, it's a separate class action, and it says they're doing a rush proposal to get legal representation, and nobody knows who is actually suing them. So this led to some discussion back and forth in trading, so you can follow the link if you want to read that there. And finally, I'm going to finish with some Ethereum news, and this is about the ETH ETF. So I've been mentioning Bitwise a whole lot on Rocket Fuel recently because they're one of the ones who are, I think, kind of at the forefront of the marketing for the ETH ETF. And here they've actually been putting out some more information today saying the tech play, why Ethereum's ETP could outperform expectations. And they say Ethereum is one of the most exciting technology investments in the world. Given investors' love for tech, it's easy to imagine that they might sell a small amount of their tech exposure and add ETH. So this idea that, of course, if this happens, then ETH's price is going to be really sensitive to these inflows, and the price is going to rise a lot, which means more people want to buy ETH, which means the price will rise a lot more. And it kind of becomes like this snowball effect potentially. So anyway, the case that they're making is that Bitcoin is good as a monetary asset. However, if you care about tokenization, stablecoins, DeFi, gaming, NFTs, digital identity, and DAOs, if you care about all those other topics, then you need Ethereum. One of the things that was really funny is that in the replies right away, Anti-Prosynthesis says, why isn't there a green dot under Ethereum as a monetary asset? So of course, the ETH bros, we like to say that, ETH is money and ETH is a monetary asset as well. And then a whole bunch of other people were following in the same line of thinking, saying, oh, wait until Bitwise realizes ETH is a monetary asset as well. Might want to add another green dot. And then what makes BTC a monetary asset and ETH not? So, one of the things that I loved here was Todeschini, I don't know how to pronounce that person's name, tagged Eric Balchunas, who's one of the Bloomberg analysts, and said small potatoes. And then he replied with this gif saying, less haters, more taters. So it's funny that he can laugh at himself about that now. But yeah, Bitwise are definitely, pushing Ethereum as an asset, pushing Ethereum as and something that people should buy in their ETF, and they're really pushing the envelope on that. So great job, Bitwise. Keep it going, guys. But anyway, on that note, I'm going to end today's episode. I'm not sure if there'll be an episode tomorrow or not, considering its independence in the US. I'm going to be traveling from next week for 4 weeks, so Rocket Fuel might be a little bit intermittent over the next month. So I might get an episode out tomorrow and Friday, just to make sure that you guys get a full week before I'm off for a while. I'll still be making episodes, but they're going to be more sporadic, most likely. Probably 3 days a week instead of 5 days a week for the next 4 weeks. But otherwise, I'll be around, and you'll see me in the Discord and other places. So thank you all for watching, listening, and being part of the Rocket Fuel community. Definitely go and listen to those tokenomics episodes. I think they were really good. Of course, if I say so myself. But I will see you all tomorrow, or hopefully tomorrow. Bye.